especially in the field of investing now, since I'm in the field, so let's connect it there. I see most of the analysts who are trained and who are basically been trained in investing and who have read about risks and how to mitigate risks and all. They're not able to make the very risky move, what they perceive as risky move. Suppose some XYZ stock, let's say in our market, there are finance companies and hydro companies which gain traction, buying traction due to the news and all those things. They increase as well and have provided handsome returns to investors who have traded on the stock. But a proper financial analyst who is more imbibed towards value investing, or let's say fundamental analysis, would not be investing in those stocks, right? So who looks at the financials and all will not be investing in bogus stocks. Some of the finance companies and some of the hydro stocks are bogus, basically. But still, due to the reason a properly trained professional might not be investing in risky stocks, what he perceives as risk, and a layman would be investing regardless of the risk. He would just buy it, market.
Herd effect.
Herd effect. He would go into the herd mentality and buy it. And because of the momentum, he'll be profiting, let's say 15 to 20%. Whereas this guy who looked at the financials and thought that this business is wrong, is not, in the short term, will not be making that significant amount of money. It's both way around. In profit as well as in loss. So, so that's a basic thing. But more knowledge and less knowledge. That
so you spoke about value investing, fundamental analysis, technical analysis. If I came to you as a student, how would you explain them in the simplest terms?
Simplest of simplest terms would be, you have this location, right? Location. So I'm sure you've selected this location based on some of the inherent tenants of this location, in the sense that maybe this location is good for your business, maybe your customers are near you, maybe this place is suitable for whatever businesses happens in this location. So looking at all those factors that actually impact your business, and then taking the decision to rent a space or buy your space, your office would be similar to fundamental analysis, because fundamental means the root. You're looking at what is important for the decision process.
So like the location of the office, any very affordability, any like the access to the road and all of those things.
Everything.
Practicality, basically.
Practicality and all those things you look and you'd buy. So that would be kind of a fundamental analysis. But technical analysis would be some XYZ dude just saying that, okay, if you buy office in this area, due to its northwest, south, whatever facing location, you'll have a good business.
Vastu.
But I'm not trying to gain any knowledge, because I respect all knowledge. And in our tradition, it's said every knowledge is, what we call a symbol of Saraswati. So I respect all knowledge, but still that would be similar to just following the information that's in the market. Not exactly, but still I would look at it that way. More clearly, I'd have to say, basically the difference is that one who looks at the books of accounts, basically financial statements, income statement, balance sheet, cash flow, and tries to understand the inherent business, more importantly, and what are the factors that would make a business work, and what might be the factors that might not make the businesses work. If you would look at businesses or investing, before investing, if you look things from that angle, that is fundamental analysis, basically. And technical is only price volume chart. So today, XYZ company increased 5%. For the past, maybe 6 months, it's been increasing for 10%. So next 6 months, trying to extrapolate the same 6 months into the next 6 months. If someone says that it might increase for another 10%, that would be technical. So it's price volume based technical analysis.